What's up? What's up? What's up? Sardar. Sardar. Hopefully I pronounced that right. What's up, brother? Marking the register. What's up, bro? I'm just posting this on all platforms real quick. Give everybody an opportunity to hop in. For those that miss it, it's always recorded, right? So people that can't watch it, they'll still be able to see it. Honestly, doing these on YouTube is way better. I was doing them in the Discord for a little bit, but it's just not worth it. It just creates too much work. I have to record everything. Dun, 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 dun. Okay, let me just post on Instagram. How's everybody doing though? How's everybody's weekend? I hope everybody had a great weekend, man. Great weekend. You got to take the weekends to, reflect, refresh, decompress. The way to do it. I don't think about trading. Try not to use any brain points on trading on the weekends other than today when I do my forecast. And then I just show up every morning throughout the week and I say, okay, how's New York looking? Because if New York doesn't look good, then I'm not trading. All I really care about is that 8 to 12 window, that 9:30, 8 to 12 window. All that matters to me. And I think that's maturity as a trader, is realizing you don't have to trade 24/7 around the clock, and you're just going to deteriorate yourself trying to do so. Set a specific window of time to trade. Have the frequency you're looking for within that window. Have the model you're looking for within that window. Show up every day. Put on the risk. Detach from the outcome of every trade and do that over a long period of time. It sounds very simple, but it's obviously not. Alright, let me post this. Right, it's hard to show up every day and detach. It's hard to show up every day and follow your rules. You have to be disciplined. The reality is trading is, profitable trading is so hard because I can lay out my model step by step. Someone else can lay out their model that's extremely profitable step by step. But if you can't be disciplined, if you can't wait, be patient, follow the rules, manage the risk, detach from the outcome, all these things, then you're not going to be profitable with it. So those are the things that really, move the needle. And that's what I tell everyone. That's what I tell my students. Right? Obviously, TA, learning how to read price, is a factor and it's part of it. But once you understand, price and what's going down, how to spot the model and whatnot, you don't need anything else beyond that. Everyone's always looking for the fancy new thing, fancy new concept, trying to learn. But I think a lot of people get stuck in a loop of learning. The reality is that, you can learn as much as you want, but if you don't embody the person that can be profitable with the model, you won't be profitable. It doesn't matter what information you have. And I think that's really, really important. I'm going on a rant here, pre-forecast, but I'm spitting right now. Really important stuff to understand, guys. So don't get caught in that cycle. Do not get caught in that cycle of, new concept, new model, new edge, cool. Because if you don't embody the person that can trade an edge profitably, it doesn't matter what you use. Yo, Wagwan, man. What's up? Juju. Amit. Hopefully I pronounced your name right. What's up, brother? Hey, man, that recent video became an eye-opener because I've been taking random SMTs. Yeah, bro. SMT is very important to understand, because if you don't understand it properly, it just adds noise. It just adds noise, right? So if you're just marking out random SMTs, if you're looking for them at the wrong areas, it's just gonna hurt your trading. It's gonna add noise to your trading. So that video is really important to understand. SMT at key levels in alignment with the draw on liquidity. That's how it should be used. Anything else is noise, right? So if you're looking for higher prices on the day and you have a bullish bias, you're only looking for SMT at lows, at key levels. I removed SMT from my plan. I believe SMT is very important. The more that I've studied it and back tested it and have seen it through my own trading, it always precedes expansion. It's a really nice hat tip to say, okay, expansion is coming, smart money is involved. But of course there's going to be ways to be profitable without it. It's not like you need to use it. I just think it's a great thing to use. Good day, bro. Trust you're doing great today. I'm always great. Blessed and highly favored, brother. I truly can never complain. One thing about me is I really try not to complain ever. You know, of course we have our bad days. We have our slumps. Been through my slumps, but I really try not to complain. Blessed and highly favored always. All praise to the Most High. Should I stop to open a position from... Should I stop to open a position from... I don't know. I don't understand the question, bro. I need way more context and detail than just that. Like, I need way more. I gotta understand way more than just first 15-minute FEG and wait for second FEG. There's a lot more that surrounds building a narrative and trade idea than just that, you know? I can't really answer that question. All right. Let's hop over to the charts. Look at the economic calendar. He's talking about order flow legs. You can use the first 15-minute gap off of a 4-hour. Right. Yeah, okay, so with more detail, yes. You don't need to wait for the second one. I believe that's waiting for way too much confirmation. I think you're going to be waiting way too long. What you could do if you were using the 5-minute is wait for the second fair value gap if you wanted that extra confirmation. But waiting for 2 fair value gaps on the 15-minute is overkill. I think that's just... Here's the thing about trading, guys. Here's the thing. You can either demand confirmation and have a later entry with higher confirmation of price holding and going in your direction, or you can demand less confirmation and get a more sniper entry with higher R. So it's finding a balance between the two. If you're trading off a 4-hour fair value gap, waiting for 2 fair value gaps is overkill. You're just gonna... price is gonna fly without you almost every time. Instead of 1 but 2 on the 4-hour. Yeah, it's a lot too much. Alright. Hop over to the charts now. Okay. You guys know the drill, right? Starting with the economic calendar, getting a feel for the weekly profile, understanding where price and how price is likely to deliver. You know, what days are we interested in price expanding? What days are we expecting price to just want to consolidate and hold up? First thing I'm seeing off the bat is FOMC on Wednesday, right? So we have an FOMC week. Usually price tends to wait up for these big 3 news drivers: FOMC, NFP, CPI, the big 3 news drivers, as we all know and love, right? Price tends to wait up for them. And what I mean by wait up for them is the days prior to a big 3 news driver tend to consolidate. They tend to be slower, you know, not a lot of intention. And so we don't tend to reach for our weekly targets or objectives until after a big 3 news driver. Now that's not always the case. You know, we are operating out of a window of probability always. Everything that I do is probability theory, right? So it's really important to understand probability theory. What I say is not bond. When I say, oh, it's a Monday with no news, we're likely to chop, it doesn't mean that we're guaranteed to chop, right? We can expand like crazy on a Monday randomly, and it's happened. So it's about understanding probability. 100, 200 times over, if you look at all the Mondays with no news, we're much more likely to consolidate than we are to expand. Can we expand? Absolutely. So that's an important distinction to make. Monday, we have Swiss franc, CPI red folder, pound bank holiday, USD red folder. So that's nice to see USD red folders. That's mainly what I'm trading. It's USD correlated instruments. And then yen red, bank holiday. So pound and yen, you want to be avoiding on bank holidays. USD red folder should give some volatility to instruments on Monday. So I am interested in trading on Monday. Now, again, we have FOMC on Wednesday. So if price is lethargic, Monday and Tuesday wouldn't surprise me. But that red folder on Monday is a good sign. See some expansion. Tuesday, we have New Zealand dollar red folder, employment and unemployment rate. Right here. I don't know why it's doing that. But yeah, so Tuesday we have that. Wednesday, FOMC. FOMC statement, right? Not meeting minutes. FOMC statement and then press conference. There should be a lot of volatility on Wednesday, right? This is a rate statement. Thursday we have Euro bank holiday and then pound red folder, USD red folder. So good amount of volatility this week. Monday we have it. Tuesday we don't for USD. Wednesday, Thursday we have it, and then Friday we don't. I am skeptical on the days without news. That's not to say that I won't trade with my current model. I will trade days without news, but I need to see expansion. I need to see fair value gaps in the charts, in the price action. So I'm going in with a a skepticism. You know, I'm really going into these charts with a skepticism on days without news and saying, okay, prove to me that you want to expand for me to trade. That needs to happen. So that's the economic calendar for the week. Let's look at dollar. Crazy, right? Crazy how this weekly candle closed respecting the objective. Right? We talked about how this monthly sell side was the objective for the month. We had a O, H, L, C bearish candle, right? And once we took this major order pairing objective, this major sell side, we actually closed within it, respecting it. So a very, prototypical open, high, low close. Saw the retracement the last few days of the month, and that's what we like to see. That's very nice delivery on the monthly. Now what we see is a SIBI all the way up here in a premium, right? I don't really use premium and discount. I don't need to. I just base everything off fair value. Gets me to the exact same destination. Right? So everything that I do is about getting to the same destinations in the most simple way possible. Right? I already know that SIBI's in a premium. I don't need to mark it out. But the question is, do we want to just continue lower from an area like in here, this area of fair value, or do we want to reach up for that SIBI? That's what I'm gauging, because we swept the major sell side, the major external on the monthly. So there's not much else to pull on the monthly for me. Understanding that we swept and respected that sell side, that order pairing objective is important. So I'm bullish towards this weekly gap, right? So you guys saw in the Discord, for those of you that are in my Discord, I don't think people are taking advantage of the calls that I make in the Discord analysis every day. I'm literally telling you exactly what the bias is. I'm telling you exactly where price is reaching for. And yeah, I don't think that people are taking enough advantage of it. We talked about bullish dollar towards this weekly gap. I gave you guys a bullish bias on dollar that entire week, right? So take advantage of that and understand why I feel that way. Understand how I'm coming to these conclusions. Why was I bullish on dollar towards this internal? Why was I bullish dollar last week? Well, we swept the monthly sell side external. We had the weekly imbalance. So we're looking for price to draw towards internal after sweeping that monthly sell side down here, right? So I'm looking for a bullish dollar. You take that bias, you apply that to majors. If dollar's bullish and expanding, okay, euro, pound, AU, NU, bearish and expanding. CAD, Swiss franc, yen, bullish and expanding. So these biases and these analysis that I'm handing out to you guys can really help. But it's important to not just take what I'm showing you, really dissect it and figure out why I feel that way. How am I coming to these conclusions? So we have this weekly internal hit, and from here I'm gauging if the 4-hour flips. I'm reading the order flow on the 1 hour and 4 hour, and I'm saying, does price want to flip bearish here and respect this weekly internal and now move lower and reach for external again? Or do we want to invalidate this and dig deeper on that monthly leg? That's what I need to see, right? So everything I do is if this, then that. I create theses and price either confirms or denies it. At the end of the day, that's all trading is. right? So I have my clear areas of invalidation. I have my things I'm looking for that validate, right? So if I'm framing a short thesis, if the 4-hour flips bearish, which it is, if it respects this leg and continues lower, then I will look to short this the rest of the week, meaning I'll be bearish bias the rest of the week. If we trade higher through this weekly gap, if we don't remain bearish on the 4-hour on dollar, then I'll look for price to continue higher bullish and reach deeper on the monthly, right? If this, then that. And then I have my areas of invalidation. So that's what we need to see for lower. I would favor lower dollar. I want to see this leg hold, right? This leg right here. Oops, that was a bad circle. This leg right here, I want to see hold. Not the greatest close in it, but I still believe we can move lower. We have all this engineered low resistance liquidity. This is a great signature in price that you want to be seeing on the opposing side of the curve. And then you get moves like this where we just run through it like butter. So I'm bearish dollar. I want to see this weekly hold. But I obviously have my areas of invalidation as well. But I'd like to be bearish dollar and see this area of fair value respected by price and this leg hold on the 4-hour. So for me, I want to see price begin to move lower now. Not the greatest close in there, but we're just messing around. So bearish dollar until otherwise. Indices are in an interesting spot, right? What are we going to do here? Well, we talked about how on the 6 month, we had a really nice signature of fair value being offered. Really nice. The monthly, we swept some sell side lows. Now we're reaching higher for this SIBI on ES. NASDAQ already hit it. So the question here is on indices. Do we want to flip from here and move lower? And is this a fake bottom that we're going to now go target external? Or do we just invalidate this monthly SIBI and begin running towards all-time highs? So this monthly SIBI and the daily order flow is my compass. It's my guide to what indices are doing on the macro time frame, right? If we're going to go lower, the daily is going to flip. You know, I'd like to see some form of SMT with ES and NASDAQ at the internal. I'd like to see the daily flip bearish and begin pointing lower if we're going to get lower indices towards this external. And then that would, you know, tell me that this is likely a fake bottom. If we trade into this monthly SIBI, we never flip daily order flow. We continue higher with strength and validating it. I'm looking at all-time highs, right? So I don't marry a direction. I don't marry a thesis that I create. I have no ego in my trading. I don't care about being right or wrong. I understand that I need to see this to validate my shorts, and I need to see this to validate my longs, right? So it's just clear areas of invalidation and theses being created. There's no ego attached to it. There's no emotions in it. It's just the chart shows this. Okay, if this happens, then this. That's it. Simple. That's all it needs to be. We don't need to make it more than that. Really important to understand. Price created a daily gap on dollar. What do you make of it? Let me check the weekly first. All right, so looking at the weekly on S&P, I mentioned to Academy members, I'm expecting this to get slammed through. Like, I was not expecting this to hold at all, this weekly gap. Why was I expecting this type of fall through the weekly gap? I'm sure a lot of people were looking to potentially short there. I knew not to, right? How did I know? Well, I knew that we were creating this monthly SIBI in like 2 days, right? We have that new monthly SIBI, and now price wants to offer fair value and reach for that. So why would this hold? Why would I expect lower prices from there when we have a monthly gap up here that takes higher precedence, right? It acts as a stronger magnet. So if we have a stronger magnet pulling price up here, then this isn't going to hold. Okay? So that's why I was not looking for shorts at all in here, and I wasn't expecting this to hold at all. Right? I told everyone in my Discord and the Academy members, this shouldn't hold. I don't want to see this weekly gap hold. We have the monthly gap forming in 2 days at the time. Right? So I want to see price begin to reach for that. Playing out very nicely to the T. So what it comes down to is, like I said, does the daily flip from this monthly gap? Do we create SMT and internal? and begin reaching lower, or do we just invalidate this monthly gap and reach for all-time highs? Now the daily, like you asked, price created a daily gap on dollar. What do you make of it? Let me see. Yeah, this daily gap's forming or not forming. This daily gap is respecting. We still have this weekly internal though, so we can just ultimately invalidate this area. I would just be wanting to see price continue lower, invalidate my lower dollar. Obviously we're respecting that daily gap though, yeah, but it doesn't affect me too much. I'm expecting this to hold the 4-hour flip, and if that doesn't happen and we begin to invalidate this weekly gap, this weekly area here, then I'm expecting the monthly to want to reach higher, meaning I want to see this leg get dug deeper into. So it all comes down to the daily order flow on indices and dollar for me. I want to see the weekly 4-hour daily order flow confirm or invalidate my theses. That's what it comes down to. I gave you guys my areas of invalidation. I told you what I'm looking for. That's what I'm doing every single day, and I'm just waiting for more price action, more information to confirm or deny that. Right, so if we look at ES and NASDAQ in tandem with each other, this is how I look at Harmony every single day. We can see NAS already tagged that monthly SIBI, which is interesting. So if we are going to go lower, we could see SMT form at any point from the internal, but we need to see a daily order flow flip or change in state of delivery to confirm that, right? So for us to have a valid SMT from internal and frame shorts, the dollar needs to, not dollar, the daily needs to flip, create an order flow flip or a CISD. If we just continue with bullish daily order flow and validating this monthly, then we're going to continue to look for longs, right? So the daily is very important for me on indices right now. I'm just reading the daily, right? Bullish until otherwise. So until the daily flips, I'm just going to remain bullish, right? We're in a monthly SIBI on NAS, but we still have that monthly SIBI on ES. Until the daily flips and has a change in state of delivery or order flow flip, it's bullish until proven otherwise. How we approach it. So we are in key levels on the monthly where I'd be looking for SMT and order flow flips, but until they happen, it's bullish until otherwise. I'm approaching it, right? So you have these buy side objectives up here, and this is how I approach all my trading. We have buy side objectives up there. We have the monthly SIBI up here on the S&P, and that's how I'm approaching it. So I would probably I'll say bullish for now, because I'm bullish until we get a flip on the daily. So until price says otherwise, I'm going to just look for higher prices on indices. I'm not fading that daily order flow. Monthly SIBI all the way up here on Dow. Weekly gap I want to see invalidated. Daily bullish, we'll mark out these levels. Exact same analysis on Dow and Russell, obviously. Monthly SIBI up here, swept the external. Weekly invalidating the gap, weren't looking for shorts from there, explained why. Daily expansion candle, potentially wants to create a daily for value gap, so we'll have to see on that. Buy side objectives up here, and then that monthly SIBI up there. Exact same analysis on all the indices. Now I said I was bearish dollar. We're going to be looking for higher prices on Euro USD. Really nice weekly context. Overlapping area right here for me. Like this signature a lot. Daily bearish, respecting the daily SIBI, bearish order flow, right? We're looking for this to want to direct it towards the weekly gap. So this is just pointing us in the direction of that weekly gap. From here, I want to see a sting of this weekly internal and then the 4-hour order flow flip. Looks like we want to dig deeper on Euro. Pound. overlapping area, daily, SMT from internal. If you check out euro and pound in tandem with each other, right? Harmony model. What did we see? This is really my model on the daily, right? Model's fractal. What are we seeing? SMT at the internal. We have a draw towards the weekly gaps. SMT at the internal. And then the 1 hour flip or CISD entry you would take to short this. Dun, 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 dun. Bum, 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 bum. I'm looking for lower prices. Here's an example of a swing. Short. Wherever the weekly gap is, I'd be targeting that. Hey. Can you get 2R before that? Perfect. So I'd probably just make it a little cuter to make sure I get 2R before the weekly. Boom. Example of harmony on the daily, right? The model's fractal. I trade internal and external rotations plus SMCs. I'm approaching harmony with correlated assets. Now full transparency, what threw me off about euro pound or euro USD and pound USD last week was if you look at the currency futures, we tagged that weekly gap. This actually threw me off because I was like, okay, I'm looking for higher prices from here. But when you look at euro and pound, they're definitely looking bearish, like they want to tag the weekly gaps, and they still haven't. So could be why this isn't playing. But full transparency, that's what I was seeing on, because I look at euro and pound currency futures, and so the currency futures had already stung it. So I was saying, okay, SMT from internal, 4 hour flip. But if you look at pound, we really want to be longing the asset that creates the bullish SMT and has the clear order pairing objective. So we didn't even get the signal on pound, which is a big red flag. On euro we did, but on pound we didn't even get our CISD. So, but that's why it threw me off a bit. If you look at GBP USD and euro USD, it looks very bearish towards the weekly gaps, and they haven't even hit them yet. That'd actually be framing a short right now towards the weekly. Look very bearish to me. So I'm putting them on red until we hit the weekly gap. Once we hit the weekly gap, I want to frame longs. What's up, Sage? So bearish towards these weekly internal levels. Then I want to see some form of SMT in the 4 hour flip. We're going to need to see dollar cooperate a little bit for that to happen. Invalidating this monthly internal. I don't like AU and NU personally. We are seeing bullish SMT here where NU tagged into the internal. AU created bullish SMT and did not. The 4 hour flipped. Pretty sloppy delivery though there. Looking quite bullish. Looking quite bullish. I will say. Quite bullish on AU-NU. Yeah, USD Canadian dollar on bearish dollar. Monthly gap down here. Weekly. May not even have the strength to retrace to this right now, but we'll see. Because of how bearish dollar is. This is a good sign for lower resistance liquidity on a retracement, but right now again with bearish dollar I don't see how USD CAD has the strength yet. We might just breakaway gap this and continue lower right now, but I would just be waiting right now. This is just straight consolidation. USD CAD looks weak and dollar is bearish in my opinion. If we get our validation of this level, it really comes down to what dollar does. Yeah, you have to run a filtering process. You have to run a filtering process. You have to look at other assets. You can't just look at one. If you're just looking at IRL, ERL, ERL, IRL, you have to be looking at multiple instruments and asset classes. I don't know what that I'm just gonna remove that comment about whatever this is. So it comes down to the direction of dollar, really. USD CHF, we were bullish towards this weekly gap. Daily order flow is bullish, still respecting that gap. We have a bearish dollar, so kind of a weird spot. If you trade purely IRL and ERL, you're going to have a higher strike rate because IRL, ERL continuations are going to be aligned with the higher time frame order flow. USD yen. We have the sell side down here. Still bearish dollar, but USD yen has been pulling back, invalidating this weekly gap right now. Got to close above. Interesting. I don't really like this either. It really comes down to dollar again. I need to see the direction of dollar. I want to have clarity. We're respecting the daily gap on dollar. We're having a strong 4-hour close in this leg, so I'd need to see some move lower to confirm. Otherwise, perhaps we dig deeper into this to move lower. We'll see. We'll see what happens on dollar. I need some clarity on dollar before I trade majors. I only trade euro and pound 66B, but I would be waiting a bit on dollar because, like I said, I have my thesis here. We can trade lower from this internal, or you could dig deeper on the monthly for a retracement. So we need to see, because the monthly just swept external, that major sell side. Bum, 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 bum. Bum, bum, bum. Weekly internal playing out. Actually, pretty nice move there on crude oil. Daily internal. I'm looking for lower crude oil. This looks nice. Internal to external. 3 draws to the sell side. Actually like this. Doesn't look bad at all. Clear 1-hour sell model. Sell side of the curve. I like this. It looks good. I don't trade crude oil. I think it's more often than not really ugly, but this looks good right now. Dun, dun, dun. Dun, 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 dun. South side of the curve. Bum, 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 bum. Gold has been printing, was due for a retracement. I'm not one to call tops, but I did call that top. I will say. We did call that top, right? I'm not trading the top. I wait for confirmation in my trading. But in terms of like analysis, I did call the top in the Discord. So that's pretty cool. Right? I called this retracement. We were looking for price to want to offer fair value. This weekly buy side imbalance, I want to see price tag that. We still have bearish order flow. I want to see these 4-hour legs to hold. I'm still looking for lower prices here. I would expect this sell side to go into the weekly buy side imbalance. So I'm still bearish gold until we hit that weekly gap. Look how we trade into the area for value. Respect that lower. All right, I still want to see lower gold into the weekly gap, and then we can potentially look for higher prices here. So I'll throw that on the wait list. Gold could be a nice little thing to trade next week. Weekly internal being respected. So we're looking at more bearish. It's been a pretty big discrepancy between metals right now. Internal respecting. I'm going to get rid of this gap. Daily. Yeah, pretty nice sell-off. Still bearish metals. I don't trade silver because the props. I trade a bunch of different prop firms. I have a personal account and I have all my accounts on a prop firm with a copier, and a lot of them don't allow SIL, and I have to trade the micro. So some of them have the mini SI, but I have to trade the micro. Bitcoin, Bitcoin, we have the monthly gap. Why is it that color? There was two. We have the monthly internal holding. The weekly is flipping. Do we have a SMT there? Nothing there with Ethereum. The weekly, 6 hours. I guess this closes. Oh, because this isn't a future. That's why. Perpetual contract. So we have this weekly bullish imbalance here forming in 6 hours. All right. Could have nice internal to external context. My crypto guys. Daily, wouldn't expect this daily gap to hold. I want to see this now. I want to draw towards the weekly. So this will likely get invalidated. We'll begin to reach for the weekly gap right here. And I could potentially frame longs off of that. It could be nice. I'd throw that on the wait list. I don't trade Bitcoin or Ethereum, but for those that do, we'll just throw it on there for you. I'd be waiting for that. This gets invalidated. We're likely flipping here on Ethereum, right? It's going to follow Bitcoin. People use that for SMT divergence as well. 6 hours, want to see a retracement into that, and then we can potentially head higher. We set up a major sell side objective, so retracement now makes sense to me. We also have the monthly SIBI here on Ethereum. The price is going to want to reach for. So bullish, looking bullish to me once we hit those weekly imbalances. External to internal retracement. Just looking at indices now. It's locked in with Harmony, man. I'm locked in with Harmony. I think there's so much edge in this model because not only are we understanding intermarket analysis, like the flow of money, right, through all these different asset classes, but we're also understanding the correlation between correlated tickers and looking for those cracks in correlation when smart money is involved. So creating these internal and external rotations, pair that with SMT and intermarket analysis, you have a very strong edge. And it's so simple. You know, I used to pray for the understanding of price that I have now, and I'm just very blessed, man. You know, all the knowledge comes from the Most High. I always have to pay for it. I'm very grateful, and I enjoy teaching and giving the knowledge back for free. And you know, the more you put in, the more you get. So happy to help. If you guys have any questions, let me know. I'll answer some questions for you. Market at time does not come to reset the 1 hour gaps. Really got to read the lower time frame order flow. What is the win rate of IRL to ERL? There's a lot of stuff that's going to affect that. There's not just a stock win rate. Like anything also though, like I can give you my model. You know, I'm winning high 60s, low 70s usually. That doesn't mean that you're going to have a similar strike rate. Also, if you have different targets, if you go for higher R, you're going to have a lower strike rate with it. There's so many things that affect it. You know, it's simple probability theory. Somsky, if you target more R, right? This is just basic probability theory. If you're targeting more R, meaning you're looking for 2R, 3R, 4R, 5R wins, you're going to have a lower strike rate. It's the more you go down that ladder, it's just reality. Can you have high strike rates with solid R? Yes, there's models out there. People do it. It's possible. But a lot of things are going to affect that. So just to say what's the stock win rate of IRL to ERL, I have no idea. There's too many things that affect it. Your trade management, what you're using to enter these IRL to ERL rotations. Because to me, IRL to ERL is just a boundary. Yeah, if you target 5R, you're going to have a lower strike rate. It's just the reality. It's just probability theory. So when you're targeting 5R on all your winners, you have a lot higher probability of hitting your stop more often than hitting your 5R. Now, all that to say, you don't need a high win rate to make money with 5R. If you're hitting 5R average every winner, I don't know what the number is, but I know it's really low. I know it's really low. You know, we could look it up if you want. If you're hitting 5R on your winners, dude, you probably need, let me look it up. The win rate you would need to be profitable with that is so low. I just don't know the exact number. Trying to find it on Google right now. You literally you would need to win 17% of the time to make money. So if you win 2 out of 10 trades, you'll make money, right? You only need a 17% strike rate. But that's the thing, when you go down that road of targeting more R, right? I mean, just think about it probabilistically, right? If every single trade you're targeting something like this, you're gonna have a lower win rate. That's just the reality. There's no way around that. You're not getting extremely high R with a high strike rate. Anyone that says that, they're just lying to you. I'm sorry. It's simple probability theory. The chances of price hitting your stop is much higher than running all the way to 5R. So the further you ask in terms of R, the lower your win rate is going to be. The closer you ask for R, usually the higher your win rate is going to be. Obviously, things affect that, right? You can still have a 1R with low win rate if you have a bad strategy, but it's just basic probability theory. And you have to find a balance between the two. So for me, like a healthy balance is 2R. 2R with like 50, 60, 70 fluctuating, even 40 on a bad month, right? I only need to win 34% of the time to make money. So for me, this is a healthy balance of strike rate and R, where I'm winning double what I risk, and I still have a solid strike rate to make a lot of money and can submit to the drawdowns and submit to the losing and all that. So it's really important stuff to understand. Let's look at gold. I'm sorry I logged in late. Do you think that weekly... Let's check it out. I think the weekly gap is invalidated with that closure. Oh, we haven't even tagged it yet. So no, I don't think the weekly gap's invalidated. Oh, this one. This one, yes. I'm not worried about this weekly gap now. The first one, I'm not worried about. I'm looking for price to tag this weekly gap here. To me, this is an overlapping order block with the weekly gap. I'm looking for price to want to trade into there now. This is invalid. That gap is invalidated to me based on that weekly close. The first gap up here, the small one. What about IRL to ERL on the daily and just using 1 hour gaps as a stepping stone? If you just trade IRL to ERL on the daily, you pair that with SMT at the IRL, you'll have a high strike rate. Just target 2R. That's a profitable model. Now, for you to be able to do that, you need to submit to the drawdown. You need to understand the numbers. You need to be able to be disciplined and manage the risk. There's things that affect that, but that's a profitable model right there. That's it. Literally take the assets that I look at, pair them together, and just trade harmony from daily to 1 hour. You could do that if you wanted. That's a very profitable model. You have to get the reps in with it. Oh, you said you're entering off the 5 minute. Oh, you can do that as well. Here's the thing. Here's the thing you guys need to understand. My win rate with a model is not going to be the same as your win rate with a model because we don't embody the same person. You know, we're not the same right now. We don't perceive price the same way. We're going to see things differently. We're going to manage our trades differently. There's so many things that affect strike rate. So for me to say with 100% certainty, if you do this, you're going to have this strike rate, I'm just misleading you guys. You have to build yourself into the person that has that strike rate. Right? There's so many things that affect strike rate. How you manage your trades, the R you're targeting, the type of person you are, Are you able to let your winners run? Are you able to understand price the same way that the other person is with the model, right? I could have a 70% strike rate with my model and give it to someone else, and they might only win half that because they don't understand price as well, or they don't understand, you know, whatever the nuances are. So there's a lot of things that affect that. And you have to get reps, and you have to build yourself into the person that can be profitable with a model. That's the reality. I'm just giving it to you guys straight. That's the reality, right? You have to build yourself into the person that can be profitable. It's not about finding a model with a 100% win rate. It's not out there. It's about building yourself into a trader and embodying a trader that can you know, trade any edge. Can you explain the Bitcoin bias? I expect the daily gap to go from IRO to... Yeah, nah, see, the reason I am looking for that daily gap to be invalidated is because there's a weekly gap below it taking higher precedence, in my opinion. Right, so if you look in 6 hours, this weekly gap is forming. And so, in my opinion, the reason this daily gap is not going to hold is because we're drawing towards a stronger magnet on the weekly. Right, the weekly takes higher precedence than the daily takes higher precedence than the 4 hour, the 4 hour takes higher precedence than the 1 hour, so on and so forth. And so because we have this weekly gap forming, I'm looking for that to take higher precedence and want to offer fair value on the weekly before potentially continuing higher on Bitcoin. So I wouldn't be expecting this to hold right now. And the way we're trading through it is clearly saying disrespect. Usually win 6 out of 10 trades based on backtesting. If you have a 60% strike rate with 5R average, brother, I'll give you some money to trade, bro. Like, that's an insane correlation. You know, I'm skeptical. I'm not to say, you know, I don't mean to sound rude, but it's unreal. That would be unreal, brother. To have 5R average and win 60% of the time, you would have an insane amount of profitability there. I still don't understand SMT. Did you watch my video on it? I would watch that video again. Best prop firm. I like Blue Guardian Futures. I like Top Step. I like Tradeify. Those are the ones I'm using. My Fund of Futures I like. Those are the ones I would recommend. I recommend all the stuff that I personally use. If I'm promoting something, I personally use it, right? So I mentioned Apex. I mentioned Top Step, Blue Guardian Futures. I use all of them. Now, what I always preach with prop firms is diversify. Don't put all your eggs in one basket. Diversify through different prop firms, right? I have a ton of different accounts on a copier, and I have accounts with all different prop firms. I'm not just putting all my eggs into one basket with one firm. Because the reality is, prop firms are a great opportunity to get funding, but we don't know the inner workings of their business. We don't know if they're going to pay us out, right? Obviously, some prop firms are more reputable than others, and they have a good track record of it. But we don't know, you know, what's going on. And so like anything in life, you want to diversify your risk. The same way with a stock portfolio or investment portfolio. You're not just putting 100% of your allocation into into one stock, right? That's extremely aggressive and just not the way to maintain wealth. So like trading, prop firms, same thing. Diversify your risk. Diversification is the name of the game. Don't put all your eggs in one basket. ERL to IRL is the best. It's amazing. It's so simple, repeatable. It's amazing, Somsky. I love it. The meaning of CISD is change in state of delivery. It's an order block that gets created when price flips. There's price switching from a sell program to a buy program, or just bearish order flow to bullish order flow, or the inverse, bullish to bearish. That's all a change in state of delivery is. Please do AUD NZD and pound USD. I did pound USD. I do the majors. I haven't been doing the crosses personally. Let me catch up on everything. Do you recommend trading New York's? If you're trading PM, Hassan, I would only trade indices. And the reason I would say that is because volatility dries up on these other instruments after 12, right? So if you're going to trade PM, only trade S&P and NASDAQ, please. Like, you can go and look at the volatility. You can go and fact check me. Obviously, you know, I always say this. It's very important. Don't just take what I say. Go into the charts, see it for yourself. Go do your research, see it for yourself. But yeah, I would not trade anything else in PM session other than the S&P and NASDAQ, because they lose volatility, right? Volatility really dries up on things like gold, you know, euro, pound. It really dries up after 12. So I'll trade euro, pound, gold like 8 to 12, 9:30 to 12, because they have volatility in that window. But after that, I would not trade them in PM, because you really need volatility when you're day trading. Simply use ERL to IRL and I confirm my trades with the unicorn model and a trendline breakout with the time frame alignment. Serious. Yeah, it's awesome, bro. How do you manage the fear of being wrong? The fear of being wrong, you just reps. Like, you just be wrong a lot. But you also need to detach. Like, I don't care if I'm wrong. That's the thing. Once you begin to embrace the fact, right? This is fact, that losing is inevitable, that we're working with numbers and probability theory, you begin to realize that it's not about being right or wrong. It's just putting on trades and then you lose or you win. It's just numbers. It's literally just probabilities. Hassan, if you go, right, I'm not promoting gambling. Let me preface with that. But if you go to the casino, do you have fear of being wrong? No, you're just placing bets. Right? If you spin a slot, let's say you go to the slots, right? Again, I'm not promoting gambling. I don't gamble. I don't go to casinos. Not a good thing to do. You're going to lose as a losing game. But if you go to the casino, just really think about this. Bet on slots. Are you attaching your ego or your need to be right or wrong to that slot? When you spin that slot and it doesn't give you the outcome you desire, are you saying, oh, I was wrong? No, you just spun the slot and lost. Like, it's just probabilities. You didn't hit on that spin on the slot. So when you really think about trading, it's probabilities, right? Don't think about it as gambling, but you need to be able to detach. So it's about finding a balance between that. You need to be able to manage the risk, take it very serious and professionally, manage every trade in the downside, but then detach from that outcome. It's finding a balance between the two. And when you embrace it as numbers, which is what it is in probability theory, you begin to understand the outcome of every trade is independent of the other. It's random, and there's no need to attach being right or wrong to that, or any ego to that, or honestly any value, because all we're doing is putting on risk, and then it either hits stop loss or PT, and then we just do that over a long period of time. What copier do you use? I use TradeSync. I really, really like them. I will say, I'm going to be completely honest, right? I always like to give it to you guys straight. TradeSync is expensive. To me, it's worth it. I love it. I haven't had any issues. It's cloud-based, so it's just much better than what I was using prior. I was using Replicanto, Sergio. Replicanto by Flowbots, which is a NinjaTrader 8 add-on, and let's just say I had a ton of issues, and I don't recommend. I'm going to be completely honest. TradeSync, love it, no issues. It is expensive. It's going to be more expensive than Replicanto, but it's worth it in my opinion. Especially if you're taking, payouts, if you're profitable with it, that's a worthy investment. Somsky, set and forget, I agree with. Especially on the higher time frame, I think if you're struggling with psychology, if you're struggling with letting the trades work and you're attaching emotions to it, or you're attached to the outcome of trades, just set and forget. It really helps. I just answered the copier question. What are your trade timings? I don't trade London, but if I did, it would be like 2 to 5. That kills one window. For New York, 8 to 12, 9:30 to 12. That window. Bro, how you trade low risk trade? Can you expand on that question? Gift a free prop account to one of your followers. I usually do giveaways on Twitter with some prop firms. I can run one soon. I could reach out to Blue Guardian Futures. We can do one. What to do when we lose in a row? If you have a model and you're abiding to your model and you're trading exactly how your model tells you to trade, then you just understand that that's the cost of doing business. You're losing right now. You just lost a couple trades. You're going to lose multiple times in a row. You're going to go into drawdown. If you're trading your model the way it should be traded, right? You're putting on risk, you're managing the risk, you're executing when it says to execute, then you've done nothing wrong. You just, there's nothing else to it. You just took some losing trades. You're going to have losing trades. There's no way around it. That's a fallacy. You know, you're just doing yourself a disservice if you're trying to avoid losing. It's inevitable. It's part of the game. And if you can't make peace with it and you can't understand that that is an inevitable thing that you're always going to run into, then you're going to be caught in a loop. You're never going to be able to work through it. It's something that you can't avoid and you have to embrace, right? You embrace the suck, embrace the inevitable, right? It's like death and taxes, right? We don't try to avoid that. It's coming. It's inevitable. So accept it for what it is and figure out how you can truly embrace that. That's what's going to get you to where you're trying to go. Can you type the name of the copier? Yeah, it's Trade Sinker. If you have an opportunity to trade London and New York, which would you recommend for go to? I would trade New York probably. I mean, me, if you're asking me, I can't trade London. So I'm always going to trade New York every time. Right now I have the problem that I can pass evos but can't. You're probably getting emotional once you pass. Once you get to the funded, you probably get emotional. You probably deviate from your model. You probably change your risk management, and you get too attached. You have to be able to detach the entire way through. It's about finding a balance between not caring about every trade but still managing that downside and risk. So you have to ask yourself, what do I have a full lecture on psychology, guys. Hop in the Discord, watch that full video on psychology if you're struggling with it. Like, please, you'll thank me later. Hop in the Discord, go to the resources section. There's a full lecture on psychology I did for free. Watch that if you're struggling with psychology, please. Right, King Dice. You can learn from your losing trades, and in the beginning, there are things you can learn in terms of, oh, this is a losing trade. But eventually you get to a point where it's just okay, did I follow the model or did I not? And obviously I'm always trying to learn and see, you know, where did I go wrong? What made this lower probability? What made this higher probability? But then there's also just trades where I put on A+ and it's like, I just lost. It's just a losing trade. I did everything that I can do. I put on an A+ trade for my model. I managed the risk. I A+ performance, and you just lose. It's inevitable. It's just probabilities. So there are trades that I chalk down just to that, where I'm like, okay, this is A+ setup. I take 100 times over, and if I do it 100 times over, I'll make money. But if you're a day trader, on which time frame are you looking at? All time frames. It's fractal. I look at it on the weekly, daily, 4 hour, 1 hour, 15 minute. Fractal. You talk about low risk first stage, second stage. Oh, market maker models. Yeah, the low risk stage is just once we trade into a key level, it's that first retracement after we flip order flow. So if we trade into this key level up here, this is your low risk stage entry right here. I like to trade that. I like to trade this low risk stage, and then I like to have my stop above the protected high. So that's your low risk entry. Low risk stage. And you have stage 1, stage 2, and we hit our target. Do you prefer limit? I usually use limit on retracements, but if price just leaves without me, I'll just drag my limit up and make sure I get filled. Like, I'll just drag my limit to where price is trading at. What do you recommend for exit in terms of what? Like, what targets? What your entry model is easy most of the time. Gold reverses before hitting 2R. I mean, 2R can mean anything. It depends on where you're trading from, what time frame. It's just double what your risk is, but if it's not hitting 2R, it depends on a lot of things. But if you're hitting 2R on every win, you just need to win 34% of the time to make money. 33% is break even, 34% is profitable. Anything above a 34% strike rate with 2R on your winners average is a profitable model. Blew my account twice, now no money to trade. I think props are a great opportunity because, I mean, think about it this way, right? Are there rules, are there restrictions on prop firms? Yes, it comes with the territory. But if you think about it, there's prop firms out there where you can pay $100, $200 max to get access to essentially $2,000, $2,500, right? Your account, they market it as 50K, 100K, whatever. But the reality is you're getting like $2,500 in capital that you have to manage, right? Your drawdown, if you have a 50K account, the reality is you have a, you know, whatever the drawdown is, $2,000, $2,500 account. But when you put that in perspective, you're paying like $100, $200 to trade 2K in capital. It's a no-brainer, especially for newer traders. It's a no-brainer. So when you're learning how to trade and you're even profitable trading, it's just a great opportunity. Now you obviously want to diversify and try to stick to prop firms that are reputable and pay out. Love the no answer. At least you avoid more BS. Anyways, keep it up. Good job. I'm not sure what no answer. Hey, yes, I'm kind of confused what you mean, but it's all good, bro. Yeah, I try to avoid any noise. If I missed your question, I'm sorry. Bro, answer me. Bro, if you're a day trader, on which time frame are you looking for? I already answered you. I look at IRL and ERL on every time frame. If I'm day trading, right, it's fractal. So if I'm going from a 1 hour IRL to ERL, let's say this is on the 1 hour IRL to ERL, and then I'm looking for a 5-minute entry off that. I can look at 15-minute IRL and ERL and look for a 1-minute entry off that. I can look for a 4-hour IRL and ERL and take a 15-minute entry off that. It's fractal. So for day trading, you'd be looking at 15-minute IRL, ERL to 1M. One hour IRL to ERL. This is taking me a minute to type, my bad. 5-minute. Now this is how I'm trading, and then I use SMT to confirm these key levels. That's it. There's your intraday alignments. For the academy, yeah, I charge for my time. The reality is, if you want to be, mentored, and you actually want me to take time out of my day to teach, I have to charge for that. I do all this stuff for free on YouTube, Twitter, Instagram. Make all this content completely free. I'm doing this stream right now completely free. A lot of the stuff I do because I just love teaching, and I enjoy making content. I've made content since I was a kid, and I enjoy teaching in general in all facets. But when it comes to having a full course, having access to me every day, answering questions 24/7 around the clock, all that stuff, yeah, I do charge for that time. But it's just an option for people that want to invest more in having a mentor. What makes me a mentor? I'm consistently profitable trading, brother. Been trading since 2019. Is the academy 1-to-1? So I don't do the one-on-ones right now. I'm not doing any paid one-on-ones. Just doing live trading in there. You can literally see every trade that I take. See me live trading every day. You can document my trading if you want, right? You can have my analysis every single day. It's all in there. But simply what I'm doing here is just trading harmony, right? So I'm trading these correlated assets. NAS or US30. It depends on what criteria you're looking for. IRL to ERL. So Hassan, with IRL and ERL, if price tags one internal on a correlated asset and the other SMTs, it's valid. But if it doesn't tag it, no, then I'm not trading unless price tags IRL or an ERL. So unless price tags a key level, I'm not taking a trade. Now, when it comes to correlated assets and tickers, well, we want to see SMT between them. And if one tags and the other SMTs, that's a valid trade. Because you're still having one key level tag. But yeah, if you guys haven't watched the SMT video, definitely check that out. I'm gonna send a link to the SMT video in the chat right now. Definitely go watch that after the stream. Check out the content I make on YouTube for free, right? I don't charge for anything on YouTube, on social media. I do that all completely free because I enjoy to, just spread that wealth and education. It's out there. It's out there for the people that don't want to pay, right? So it's really not about making money. It's about spreading good education and quality videos and being the person that I didn't have. I started trading in 2019. I wish I had access to the education and access to the stuff for free that I'm giving out. I'm trying to be the person that I didn't have, really, honestly. So it's out there for the people that don't want to pay for free. For the people that want it more put together, want access to me, want more streamlined one-on-one mentorship, that's where I charge for my time, which is fair, right? If you go and you want golf lessons or swim lessons or lessons from someone directly and they're taking hours out of their day to teach you how to do something, they're going to charge you anywhere in any business. You're gonna have to pay to learn. Now for the free stuff, it's all out there. Yes, if you have an issue with someone charging for lessons, taking hours out of their day to teach, I don't know what to tell you, brother. You're gonna have to pay anyone in any world to teach you how to do something. Do you expect someone to give you golf lessons, to go and teach you how to play golf and give you lessons and take 3 hours out of their day and teach you completely free? It's just unrealistic, bro. I don't know what world you're living in. This guy's hating. You should apply yourself to learning how to be profitable instead of chirping in chat, brother. All the proof is out there. All my trades are documented. Been trading since 2019, brother. Use daily profiles. I don't use daily profiles. We talked about the entry time frame. So what would be an entry? So Chirag, I showed my entry model in one of the YouTube videos I made. It's called the order flow flip entry, just for value gap entries. So I take CISD and fair value gap entries. So it's either an order block entry, essentially, or it's a fair value gap entry. Once we trade into our key levels, right? Key levels being fair value gaps or swing points, IRL or ERL. We're looking for price to SMT, and then either create a CISD or an order flow flip. Those are the only two functions I use for entry. It's all good, bro. I mean, you can do your research and you can see the proof in the pudding. I really don't have anything to prove to you. Proof is in the pudding, right? You can come watch me live trade every single day. It's out there. If I wasn't profitable and I didn't know what I was talking about, I wouldn't be live trading every single day. That's the reality, bro. That is the reality. That's what it comes down to, right? I'm not going to exert myself anymore answering any questions like that. But yeah, if you guys have any other questions, I'm happy to answer. Otherwise, I'll probably wrap it up there. And like I said, when it comes to mentorship or the academy, you guys don't have to join. I give all this stuff out for free on YouTube, Twitter, Instagram. It's out there for free for the taking. If you want to put the work in and go find it, it's there. For the people that want a shortcut, for the people that want, access and to see me live trading, take the same trades as me, get their questions answered, have a mentor, then yes. The reality is that you will be charged for that. I value my time the same way anyone else would. I don't really understand the whole negative around that. If I know what I'm doing, there's no issue with me charging for my time. Bro keeps producers. Exactly. If there's a CISD without a gap, yes, I will. Absolutely. I'll just straight up enter off a gap or a CISD. Brother, then don't join. Like, I don't know what to tell you, brother. It's as simple as that. I don't know what your end goal is here. Just don't join. Continue to do what you're doing, bro. I'm not gonna go back and forth. I'm just gonna ignore you from here on. It's all good, brother. You're entitled to your own opinion. Proof is in the pudding. Live trade every day. You can see it. Like, I don't know what else to tell you. If you don't want to join, don't join. This is the reality, guys. Everyone would rather be in the chat chirping than making money. They'd rather exert themselves chirping others and being negative than just figuring out how to make it work and actually make money in these markets. So it's all good. I'm not gonna go back and forth with you, brother. Said my piece. Yep, I live trade every single day. Proof is in the pudding. If I wasn't able to consistently pull from these markets, I wouldn't be able to show up and live trade my performance every single day. Just really think about that and put that together for yourself. Can you upload your psychology video on YouTube? That's not a bad idea, Hassan. If you don't, if you want to find it, just go into the Discord. It's right in the, here, I'll show you, Hassan. Let me share my screen. I'll show you where it's at. Yeah, I wish you luck, AS. It's all good, bro. Like, I already said my piece. I'm not gonna go back and forth with you, brother. You're entitled to say whatever you want. You just understand that you get what you put out. You get what you put out. Psychology video. No matter what you do, you're gonna get people like that. That's the reality of life. You're always gonna run into people that Where is my recorded streams? Alright, Hassan. Keep in mind, what's that word say, AS? What is all this? It's all out there. I do all this for free. So if you have an issue with that, I don't know. All this. All that for free, for the taking, for the people that want to put the work in and go apply themselves. So if you're hating on me for that, I don't know what to tell you, bro. It's all out there for free. This is the lecture, Hassan, if you want to go tune in on that. This is a full 50-minute lecture on psychology. I also did for free, keep in mind. So yeah, Tune into that amazing psychology lecture I ran through. The things that are really going to make a difference in your trading to allow you to trade an edge profitably. So check that out. Yep, all this stuff is in there. So tune into the Discord, completely free, and all this is here in the free education. But yeah, I mean, it is what it is, guys. I hope you guys had a great weekend. I'll be in the Discord every single day posting my analysis, which I also do for free. So it's all good. I hope you guys have an amazing rest of your day, and continue to apply yourselves. I'm happy to help. I'm happy to, continue to guide you guys. So just let me know. If you have any questions, I'll be in the Discord. You journal your emotions along with trades. I do. I journal my emotions before, during, and after. When it comes down to emotions, it's really just about detachment. And then, like I said, before, during, and after. How did I feel before taking that trade? Was I detached? How did I feel during when the risk was on? How did I feel after I took the loss or win? So I think a before, during, after format in journaling with your emotions is key. Because once you get emotional, or if you don't, you want to document where you got emotional, what made you emotional. So before, during, after format for my journals. ICT student, I guess. Which model do you trade? I have a full free course on my model. How did you unlearn the unnecessary stuff? Oh, that's a good question. I went down the rabbit hole. And I stripped it down to only what was necessary. I stripped it down to only what I needed. That's what it comes down to. I realized that all I needed is liquidity and fair value gaps. And I tuned out all the rest of the noise. I trimmed off all the fat, and I just used the things that are really important and matter. That's what it came down to. I went deep down the rabbit hole, went way too far down the rabbit hole, had a lot going on, and then I simplified it. Right? There's a quote, I think it's from Leonardo DiCaprio. He says, "Simplicity is the ultimate sophistication." I definitely agree with that. So fair value gaps and swing points are the ultimate sophistication to me. Ultimate simplicity. But yeah, I hope you guys have an amazing rest of your day. All praise to the Most High. And yeah, man, I'll be in the Discord, so let me know if you guys have questions.